Good afternoon. Welcome to the market close for July 22nd. We've got a green day to start the week off, so we got the green sign going. Not a bad way to start the week. Not a bad way at all. Whew, it's been an interesting couple of weeks. A lot of news happening, a lot of changes. What can we say? What can we say? And those of you who were not here yesterday, the wall is done. The wall is done. The gray and the white is up. You can see it a lot better with the sign. So that's not too shabby. So looking forward to that. Looking forward to that. Okay. As always, let's start off the day with a quick look and see where the market is right now. All right, here we go. As you can see, Bitcoin right now doing okay. It's at 68,000. We put a new line in yesterday during the stream, so we can sort of compare it to where it was at yesterday. So that's all fine and dandy. So, as I said, we got a green market. The TSX is up 0.8%. The S&P 500 up 1.14%. NASDAQ's up 1.5%. Gold it's mostly flat, though right now it is a little bit down. It's down 0.1. Silver down 0.12. Gold. Well, black gold, oil, that's down 0.57. And Bitcoin currently right now is sitting at 0.17% down. But yeah, it could very well be back into the green as the stream continues. So we'll definitely look back in a little bit later on that. Okay, let's take a look at the heat map. This is a nice looking heat map. I see. Wait a minute. I got all the red turned off. It was much nicer than it should have been. But it's still pretty nice. We do have a lot of green. Most of the banks, they all look to be pretty much in the green. Look at CIBC up 1.37%. We got Constellation Software up. I don't know if Vic is here yet, but I know he'll be happy about that. The railroads both up, CNCP. Here's one of the big down people is Rogers down 3.25%. I know that Rogers has an earnings call. I believe it's this week, so I don't know which day it is this week, but I have a feeling that's not going to be the best earnings call for them. So over to our ETFs. They're all looking pretty good. They're all looking pretty strong. Market's looking good. So the ETFs, of course, are going to follow. Good old VFV up here in the corner, up 1.18%. Gotta love it. The battle between VEQT and XEQT. XEQT's winning today. They're up 1.15 compared to 0.98 for VEQT. All right, let's look at the U.S. market. Once again, not too shabby. Look at this. Oh, look at NVIDIA. NVIDIA is up 4.75%. That is fantastic, but it's not as magnificent as they can be because look at Tesla, up 5.30%. So that's looking really good. And crypto. Here we go. Oh, crypto, what are you doing to us? Oh, we got a lot of red. Other than XRP. XRP has been doing really good lately, up 3.46%. Bitcoin right now, like I said, they're only down 0.12. That could very well be green by the time we take our final look a little bit later. And look at all these coins down here. Let's do it. Let's find some coin I've never heard of. We're going to go deep. We're going to go very deep. Let's go very, very deep. Oh, bring in, come on, guys, bring in. All right, there we go. Just so I can move a little bit better. All right, here we go. I'm going to pick this tiny little coin down here. Let's see what we got. It's Yield App. Well, if I was considering buying, I'd look at this and I'd want to yield. So yeah, once again, a coin I've never heard of. There's so many, like there's over 14,000 different little coins out here. And here is the Yield App. No idea what this is about. Is this inspired by the yield sign? I don't know. So, if any of you guys have heard of the Yield App, feel free to talk about it in the chat. But this is the crypto coin I've never heard of the day. Yield App. Holy banana bread. Oh dear. All right, let's get out of that coin. I gotta say, oh, look at this. And just while we were looking at Yield App, Bitcoin's almost back to the positive, 0.02% down. So that's not too shabby. Not too shabby. Okay, it's time to check out chat. Let's see what's going on in chat. Let's bring back a big me, and we'll get in here. We got Bleak first in the house with a hey. We got Mario in the house. We got Vineet. Yes, I need to win another membership. Giving any away today? No, you should have been there yesterday. Should have been there yesterday. I gave one away yesterday, but first Sunday of every month I do give away usually 10. Last one it was 11. So it's always a good time. Mary says hello, and of course Mary's here. So guys, you gotta hit that like button. You gotta hit it good, turn it blue. It'll be good. Vineet has already done it. So when Mary's checking her list, he's on the nice side right now. Let's see. Proud of you, Vineet, and good luck. Absolutely. Jackie is in with a hi, and we got a Sammer. Hi all. Like number 8 is mine. Nice. And Mario says, you just pasted the Mountain Finance coin. I don't know about that. I don't know if I would call it yield, but that's funny. And Al's in the house with a good old hi. All right. Very, very cool. Whew. It's good to finally, it's good. It's always nice to have a good Monday as we start off the week. Of course, this week is going to end with a big stream. So on Friday, it's a double stream. It's not only is it our 4,000th sub celebration stream, it's also it's our 200th live stream. So yeah, we've done well, let me show you. I will pull it up for you guys. And I suppose I should share the screen if I'm going to show it to you. All right, here we go. It all began back here on November 6th of 2021. We did a stream. And we've done more streams. And it's kind of interesting. Back here, it was actually called Saturday Night Live Stream. And then it changed. Basically, in April of 2022, it became This Week. It transitioned to a more of a news digest type stream. And yeah, they kept going. Oh, look, there was the 1,000 sub celebration stream was in there. That was a drinking stream. So I actually was drinking on that stream. I got a little tipsy. I will say, absolutely. But then it kept going and going and going and going. And look at this. We even had a 2-year birthday stream. Oh, this is fantastic. So then here it goes. Last year, December 13th was the beginning of the market closes, the first ever market close. We did them through December. And then it just became where we're at today. So right now we're right here. So this here is stream number 198. Wednesday's 199. And the celebration is going to be number 200. So that's not too shabby at all. So I do like, I do like that. Let's see. Mario says, well, good news. My A&W stock is up lots today, 19%. Really? Ooh, that sounds kind of cool. Let's take a look. All right. A&W. Let's see here. All right, aw.un. And look at this. Look at this. That's just the last 5 days. So yeah, from 28.51 up to 35.15. All right, what's going on here? What's going on? We'll see if we can figure this out. Let's go over here and we're going to bring them up in trading view. So AW dash UN. Well, we'll try .un, see if that'll find it that way. Come on. Here we are. All right. So this here is a royalty company. Now I'm wondering if there's any chance they had. No, they didn't. I was gonna say if they had an earnings, but look right here in the news. So A&W Revenue Royalties Income Fund shares rally after deal to combine with A&W Food Services. There we go. Nice. This is nice. And that's a pretty good pump for you. Oh, wow. So yeah. So in the morning trading, 17%. Isn't that what you reported? No, you reported 19. So that's not too shabby. Not too shabby at all. Yeah. Okay. So yeah, it's just the way it's working. So A&W Revenue said that under the agreement, its unit holders will receive either 37 Canadian dollars in cash or one share of the combined company for each unit held. So that's very interesting. Wow. Very cool. Was anybody else holding A&W? Just curious. All right. Uh-oh. Here we go. This is one of these things I have always said about penny stocks. You got to be a little bit careful. And in this case here, let's get back here and let's take a look here. So NNE, we were just talking about it the other day. So that's the nano nuclear energy stock. And they're involved with a fraud. Well, on the bright side of things, yeah, it's coming back down. So yeah, you gotta be careful. Sometimes that does happen. Nothing we can do. I love this. So Sleep Country. Ticker is ZZZ or ZZZ. So here we go. Sleep Country Canada. So look at this. Another great jump. What's going on with Sleep Country? I don't know. Let's take a look. This is one of the reasons I do love TradingView, because it will usually if there's something in the news, it's going to give it to me right away. So I do like that. So let's come in here. We'll add ZZZ or ZZZ. Here we go. Sleep Country. Let's add them. Let's head down. Take a look and see what we got. Let's see. The TSX rises after Biden withdraws from the U.S. election. There's a takeover. Here we go. Sleep Country shares leap with a $1.7 billion takeover by Fairfax. There we go. And that's always good. It's nice if you can see this coming. Sometimes you can. A lot of times it happens without you really knowing, and then you sort of can't jump in on it right away. But when you already hold the shares, that's when you're in luck. Because that's what happened to me when Rogers had announced that they were taking Shaw Communications. I was invested in Shaw Communications. I had quite a few of them. So I was like, this is fantastic. I did sell them right away because I didn't want to hold any Rogers, to be honest. Rogers is just a company that rubs me the wrong way all the time. So, but holding those shares, they went up quite a bit. I took the profit and never looked back. Although I do miss Shaw. I liked holding Shaw. Let's see here. It's a secret. No, it's not. No, it's not. We just found the news. Holy banana bread. This is going to be a good one. Based on one of your deep dives, I took a half position in TF.O. Should I make it a full position before the interest rate cut on Wednesday? All right. So we're looking at, so TF is, of course, Timber Creek Financial. I do like this company. And I will tell you right now, let me take a gander. That's not what I wanted to gander at. This is what I want to gander at. You guys can't see it yet because I'm still keeping it under wraps because of the surprises in the rebalance. But Timber Creek Financial, yeah, I did buy more this time around. I actually took my hold up to 2.48%. They are a company I would not even mind going all the way up to a 5% share because I do like them. Now, with Timber Creek Financial, and let's just come over here for a moment. I'll show you guys this again. This is kind of what I'm expecting. Whoa, we don't care about that area right now, but okay. TF. One of the things that we're expecting here, and I'm going to go straight to the 5-year because then you can sort of see it. Actually, let's go to the 10-year just to. So if you look, here's the pandemic here. You can see the pandemic. But for the most part, for a long time, they've been holding basically from about 925. They've made it up to 10 a few times, but usually, let's just say 950 is a good average. So that's where they've held. They had the pandemic, and they fought their way back up. They got to 975, so they got back exactly where they needed to. Then we had a bear market, and at the end of that bear market, kind of you can sort of see that little heat in here. Then we had all of the rate hikes, and that kind of tanked them. Now they have been recovering from that, and they're going to continue to recover as we get more rate cuts. So if we do get a cut on Wednesday, and a lot of people are starting to say it's going to happen. My official stance is that we're either getting it July or September, not both, or just not both. But we'll get one or the other. It could happen. It could happen. I'm looking forward to it. I'm looking forward to seeing what happens Wednesday. And we have a stream. We do have a close on Wednesday, so that's really, really cool. But what I'm anticipating is with the as we start cutting the rates more, that's going to certainly help Timber Creek Financial. There's no reason that they can't get back up there. I think they will over time. So right now, when I'm looking at them, they've got a 9% yield. I'm expecting them to get back up into the 9s. So that means we got growth and we got a strong dividend. That's going to be some really nice total returns on this one. So that's where I'm sort of coming from. So when you ask, should you make it a full position? Do your due diligence, of course. But in my situation, like I said, for me, a full position would be 5%. And I have already said I wouldn't mind getting it back to 5%. So, it's not a bad. I don't think it's a bad. I don't think it's a bad move at all. And Mario, I think, agrees. Mario has that 5% already. There we go. BTC. Let's just pull it back in here. Bang, bang. And it's like as soon as we leave and we're not watching them, they start to do something. All right. Here they are, 68.0. How did that get? I don't know how that happened. All right. We'll stretch it up a little bit. There we go. Well, that'll do for now. But it's coming back down pretty fast. So it seems like we got a little bit of a sell-off. And that will happen sometimes. You go up towards the top. I mean, that's what I do, right? I would normally be selling up here and rebuying it back down here. So, it does happen. It does happen. But I think I'm still pretty bullish right now on where Bitcoin is going. And I think a lot of people are. So it'll be a fun one to watch. It'll be a fun one to watch. I will just say right now, with where the market is, so with the plays I'm making on Bitcoin, I will leave them overnight. because in that off hour, I don't want that to be when we get start getting some mega pumps. Um, I've heard them called all kinds of things. I think my favorite one I've heard is Godzilla candle. So I just don't want to see that happening when I can't do anything about it. So I do leave my position open at night for the Bitcoin plays, and we'll see where it is in the morning. So that will be kind of cool. All right. Prairie says, "Good afternoon, all. Listening in as I work, up 1.1% today. That's not too shabby. Not too shabby at all. Happy Green Day," says Jersky. Michael says, "Which company are you looking at?" Just a second ago, we were looking at Timber Creek Financial. So Timber Creek Financial. They're not a REIT, well, they're not officially a REIT, but they behave very much like a REIT. So their dividend is actually considered interest. So it is 100% taxable, just like a REIT. So with Timber Creek Financial, it is one of those ones I say put it in a registered account because you don't want to be paying tax. Let's see. There we go. Which company stock is she speaking about buying and holding? So we were talking about, and it's just to be clear with that. So I'm going to come back here for a second. So as I mentioned as well, so this here, Timber Creek Financial, we'll just bring it down so you can sort of see it up here. So yeah, I know that I'm confident that it's going back up to the 950 area. So even though I'm confident with the 950, I do plan to sell at about 9. And part of the reason is once it gets up here, then you're not going to have that growth component, and you're basically going to be just looking at a dividend stock. And even though you're thinking, oh well, yeah, but 9%, well, that's 9% down here, right? So any new stocks that you're buying up about here, that's probably closer to 7% than 9. So that's not something that I want to do, but there's a long way to get here. I mean, it could take a year, could take a year and a half, and I'm okay with that. I have a good dividend, and I'll have the growth as we move up, and I'm happy with that. All right, let's see here. Timber Creek, yeah. Oh, Jonathan, you're late. You haven't been late in so long. Oh, dear. What letters does it trade under? It trades under TF, and oh my God, I am very, very late. We're 7 minutes late from the bell. Oh dear. Ding, ding, ding. All right. I'm not going to go all enthusiastic because I don't deserve that privilege. I can't believe you guys got me so well, I got myself so distracted. Normally I try not to get into too much stuff before the bell so that I can pay attention to the time and all of that. And nope, not today. I have never been 7 minutes late before for the bell. So that's on me. That's on me. I should have a coffee. Oh boy. Very, very good. Mario says we all should pick it some TF. It's a good stock. It is a good stock. As I said, and some people though, like for example, if you're in that situation where your TFSA is full, it's one of these ones that I'd be like, I don't know if I want to hold it in my register just because of the taxes. But I hate paying taxes big time. Prairie says Northwest Health had a nice 5.31% jump today. Oh, did they? Northwest Health. All right. Let's take whoops. Here we go. Here we are. Yeah, look at that. Not bad. Not bad at all. So this, of course, Northwest Health is, of course, a REIT. And we are expecting REITs to start doing a little bit better. Now, I don't know if there was any particular catalyst, but let's take a look. Here we go, Northwest Health. Yeah. Oh, that's the, there we go. It helps if we choose the Canadian version. All right, let's go take a gander here. So I'm not seeing anything here, but let's see, elections. 20, they're announcing their distribution. I'm not seeing anything in particular. I'm not seeing anything in particular here. Other than they did have a price target raised by CIBC World Markets. It was raised to 575 from 5, which means that they're doing well. So that could have been a part of what caused their bump. But that's not too shabby. But also keep in mind, too, if you're looking at it, you can sort of see they did sort of have a slide. So part of it, too, might be recovery. A little bit of recovery from that. Maybe a little bit of on the good news that their price target's been raised. It's a whole bunch of different things. So that's not too shabby. Not too shabby. We'll see what's going to go on with it. So yeah, could be very interesting. Now, this is another company that will, of course, benefit well from price from a price cut. And I'll just sort of show you if we go into the key data. All right, let's come in over here. So right now, we got negative return on equity. We have negative return on assets. Their debt to equity ratio, 200%. So for every dollar of assets they have, they're in debt $2. So yeah, that's not the best. But when you do have that amount of debt, that does mean if your servicing starts to go down, it does give you a little bit more money to work with. But the other thing too, you have to keep in mind too that this to me is just, this is one of these sectors where I think they're going to do well in the future. It's kind of that sector that if you look at the type of properties that they hold, they're basically a lot of medical properties, and medical is going to be big as we get more and more boomers and starting to retire, and as Gen X starts to move into that area, that's going to create a huge demand for healthcare. And unfortunately, on the bad side, is it's going to make the doctor shortage worse, obviously, but we'll have to sort of see. There's a lot of, I know the governments are really, really working on a lot of ways to try to ramify that. And we were looking to yesterday, that whole idea of Shoppers Drug Mart being able to do blood tests, for example. That could be huge. That could be huge. Anything that we can take, like if anything you can take off of doctors, especially of family doctors, if they're not seeing people for every little bump and scrape, all of the more simple stuff, that would free them up to be able to take on more patients. So that would certainly help for sure. But yeah, I like what I'm seeing here with Northwest Health. I think that's fantastic. This is a REIT that I do like. I don't currently hold it, but I have many times in the past. Trevor says, late again. Oops. I know. I can't believe it. Mario says, very nice, Prairie. And whoops, there we go. Mario says, my INO.UN is up lots in the past week. Still down, though. Yeah, and that's the thing. I mean, we're going to see a lot of fluctuations in the market. Right now, I do like the fact that we're getting a little bit of green. Actually, I kind of would like to see some green happen, as we come to the end of this week, because Friday I do have to take the final, I have to pull the final market data for the 0 to 100K challenge for the next one. So it would be very nice to, have my numbers a little bit higher. And, because I know the last two, my pull data days happen to be nice, deep red days, everything down. I'm like, oh, great. Here we go. This is going to make my stats not look so great. And Jay says, is there better in ETF than HHL? The PE ratio is 36. I bought it because it was down for a while. So HHL, let's take a gander. Well, let's pull it up. Let's see what HHL is doing right now. All right. So once again, this is the Harvest Healthcare. All right. And we'll pull up the 3-year. Yeah, and you can sort of see it's been a little topsy-turvy, not a lot of growth on here, but you are getting a 8.319% yield. So that's not too shabby there. Now, when you're talking about a PE ratio, So if you look here, you'll see a PE ratio 27.02. I don't know. I don't know if I would put like a ton of credence in a PE ratio when you're talking about an ETF. Because normally where a PE ratio really is useful is when you're talking individual companies. And even then, it's much more useful if you look at the sector. So if you're comparing companies within the same sector, then they become a little more relevant because you do have sectors that are growing, like the entire sectors are growing, and in which case those PE ratios are normally going to be a little bit higher. That makes, and that makes sense. So like right now, tech's probably going to have on average slightly higher PE ratios. So just something to keep in mind that when you're comparing PE ratios, don't get too involved with them if it's on an ETF. Some ETFs won't even report their, a PE ratio. So it's kind of an interesting thing just to sort of keep in mind here. All right. Let's see, Michael. Michael says, did you look at VZ earnings, which by the news earnings look and pays a nice dividend and looks like plenty of growth? I've not looked at VZ. Let's take a look here. All right, VZ, which of course is Verizon. All right, first of all, let's just take a gander at Verizon lately. So, and this is the same thing. I mean, we're seeing it in Canada as well. The telecommunication sectors have not had the best time, and it's been this way for a while. Now, in this case here, and Al is pointing out that their earnings did poor. So that is one thing that will absolutely tank your stock price 99% of the time. Occasionally, you will get a company that has a bad earnings report, but for some reason, a lot of times when there is an outside reason, it's because of something announced in the report. That's not the data. They may have done crappy, but maybe they have a plan that's going to turn things around, and the shareholders really like the plan. I've seen that happen. Actually, I've seen that happen even with Tesla. There's been a couple of times where Elon has come out with, okay, here's some stuff that we're doing that's going to be really positive, that have actually turned things around and really helped have a better earnings call than they probably should have had. So definitely something to keep in mind. So with Verizon, same kind of idea. So, but, and let's just take a look at one thing here with them. I have a feeling that, and yeah, 187% debt to equity as well. So they do carry a lot of debt. So once, and it's going to be slower in the US, but once Papa Powell decides to start cutting some rates down in the US, that will certainly help a lot of the telecommunication companies, because they're sort of in that same boat as Canada. Although you can argue that some of the debt the Canadian ones are holding are pretty big. So for example, and we looked at that. We looked a little bit earlier at Rogers, but we'll pull them back up again here. And I don't care about well, I'll show you what they look like. First of all, you can sort of see it's a similar type picture, perhaps not as steep of a come down, but it's still a move, because you can see lower highs, lower lows. That's never a good sign. And with Rogers, you'll look as well. I mentioned about debt. And with Rogers, you will see here, let's see, their debt to equity, 433%. So they're just totally struggling with debt. And a lot of that is their purchase of Shaw Communications brought a lot of debt on board with it. Now, in their defense, and I normally don't defend Rogers, but in their defense, they didn't realize that rates were going to go, that there was going to be this whole rate hiking parade that we had. So they didn't realize, because, the message and the verbiage that was coming out of the government and coming out of the Bank of Canada is that, low rates are going to be here for a while. You don't have to worry about it. And then it was complete It was complete. All right, we're taking the rates to the moon. Let's do it. So yeah, it kind of went that way. Never good. All right. Mario says, I know both INO and Northwest Health are selling off some of their REIT. Andrew Moffat is the REIT expert I watch, said Northwest Health also has a new board. Okay. Yeah, and I think that's happening too. I mean, a lot, not so much REITs. Like I'm actually seeing this more in utilities than REITs, where they'll sell off some of their assets just to get some of the debt under control. But that also could make sense with REITs, because here's the thing, and this is kind of a difficult thing. When you're looking at a REIT, um, part of the whole business, part of your whole business model is that you're buying properties. You're adding to your property portfolio, and that means that you're taking on mortgages. That means that you're actively taking on debts. So debt will be higher with REITs than, for example, if I had a royalty company that had a debt similar to a REIT, I would be scared of that company. So you have to sort of look at it that way too. So I always say, for example, anybody who has to actively take on debt as part of their business model, they're going to have higher debt to equity ratios. There's no way around it. So REITs, banks, any kind of lenders outside of banks, they will have higher debt to equity ratios. And you have to evaluate them a little bit differently. Like if you go into a bank and you're like, oh, well, they have a debt to equity ratio of 150%. That's way too much. I don't like anything below 100%. Well, you might be shooting yourself in the foot from a good investing opportunity, because banks will have higher debt to equity ratios. Well, good example with a bank is if you go to the bank and you deposit $1 million in the bank. So, what happens to that $1 million is, yes, they use it. Fractional reserve banking, they hold like about 10% of it. So they'll hold about 100,000. But the reality is, when they took your deposit, they technically owe you $1 million, and they pay you interest. So it's not a big amount of interest, but they're paying you interest on that because you have basically loaned them $1 million. So that when you're looking at some of the calculations and you're seeing some of these high debt to equity ratios on banks, well, yeah, of course there is. That's what they do. They lend money. They borrow money. So they, in this case here, they're not lending you the million, but they're borrowing it from you. So in this case, you're the lender, they're the borrower. And it's a good system. It's a good system. Although you can argue that the fractional reserve banking can certainly cause a lot of issues, because there's a lot of money on paper out there that doesn't technically exist just because of the way fractional reserve. Because if you take it, if one bank, so you put your $1 million in, a bank then says, okay, I only have to keep 10% of that. So I only have to keep $100,000. I'll lend out this $900,000, and they lend it to another bank. And that bank looks at that 900,000 and says, oh, I only have to keep 10% of it. So they'll actually only hold 90,000, and then they'll lend out the rest. So what, 810,000? And it just keeps going like that, around in circles. So, money gets inflated in such an interesting way. Now it's kind of different than like where the Bank of Canada decides, oh, we're going to print a bunch of money. That's a completely different thing, because what ends up happening is, and when the Bank of Canada decides to basically print money, because the government's like, we're running out of money. We need money. So the Bank of Canada will print the money. And then what they do is they then go and they buy government bonds from the government. So they give that money they just printed to the government. That's how the money actually moves back and forth. So it's it's kind of interesting how it all works. Money is such a convoluted, it's almost like a convoluted spider web, a big one, that's for sure. Okay, what does Northwest Health invest in? If they say they are health but are a REIT, well, it's what uses the properties, right? So the properties that Northwest Health will own, the land, are going to be properties that have, for example, healthcare centers and things like that on them. So That's where the health part comes in because they specialize in a particular type of property. Sort of like if you get an industrial REIT, they basically they're purchasing land that has been zoned for industrial, and they'll be renting it out, to like industrial parks and things like that. A retail REIT, once again, retail type stores. So strip malls and things like that. That's where that all sort of comes from. Residential REIT, they're owning houses that people rent. So condos, houses, apartments, all of that kind of stuff. Michael says, let's see, I can't get TF to get a quote on Fidelity like this correct letters this trades under. Yeah. Let's see, depending on what your broker is, you could always just try tf.to to see if that works. Or what I will do if nothing seems to work, sometimes that happens, I might just type out the whole name and then let it figure it out from that point. So type out Timber Creek Financial, see if that will bring it up as well. Because I'll show you, here's an interesting thing. Let me show you. This happens to me with TD on this site here. So for example, I'm already on the page. No wonder I couldn't find it. So if I try to find TD and I just type in TD, you'll notice, look at this, there's nothing here. There's like TD Active Global Income. There's a couple there, but TD itself doesn't come up. So, I can do td.to. And even in that case, it's still not coming up. So in this case, I don't have a choice. I have to type out Toronto, and there it is, TD. So that's how I end up getting to TD. So sometimes brokers get a little bit kind of weird that way. So that's just one of the ways that you may have to sort of work around it. All right. Al says, I go to Google and I search TF Stock Canada. Yeah, there's another way as well. Google is always your friend too, depending on where you're actually looking at. So, yeah, TF Stock Canada. All right, let's take this final look at the market. All right, we're already get everything up and going. So we did finish the day in the green. That's good. 0.8% up. S&P 500 1.0% up, and NASDAQ 1.54. Gold down, not by much, 0.07. Silver down 0.2. WTI down 0.8. And, well, Bitcoin did not get back into the green as we had hoped. Down 0.12. And here's a nice one too. The Canadian heat map. Routers had a good day. 1.92%. So not too shabby. And as I said, CSU, CNQ, we got a lot of good stuff today. A lot of good stuff. Most of the telecommunications though down. Bell down, Rogers down big time. TELUS down a tiny bit as well. So what can I say? But Dollarama is up, and so is Alimentation Couche-Tard. So not too shabby there. All right. And of course, everything is looking pretty good for our ETFs. They're following along with the market. Back to the US. Like I said, it's looking good. Tech actually had a pretty good day, other than Apple being down a tiny bit. But I mean, look at this. Meta up, Google up, Microsoft up, Tesla up, NVIDIA up, AMD up. It's not a bad day. Not a bad day for tech, that's for sure. Yeah, I'm liking the looks of it. And of course, good old crypto. A little bit of a red day, but not by much. Not by much. Bitcoin, as I said, they're hovering. I wouldn't be surprised. They could easily take it back before the day is over because they do trade through the day. But everything from Cardano to Solana is down. Oh, Dogecoin's up a tiny bit, 0.95%. So not too shabby. Not too shabby at all. All right, over on the Discord and our schedule. Here we go. So the video coming out tomorrow, it's already out for channel members. So if you're a channel member, you can go watch it right after this show. We're actually looking at total return CDRs. So I have found 5 CDRs So those are those ones that by CIBC that basically invest in American stocks. I found 5 of them that have total returns above 30%. So they're pretty cool. Pretty cool. I like them. We have an ETF deep dive coming up later this week. Currently, the vote is on. And who is winning? Who is actually winning that vote? Let me take a gander. I haven't looked yet. I put it up and I've not looked once. So it is currently, oh my gosh, we've got a tight race. Yeah, we got a tight race between Evolve NASDAQ, the India, so XID. Yeah, it's tight. It's tight. We got almost a three-way race, here. So this is looking good. This is looking good. I love it. I love it. I have no clue who's going to win right now. So I have to script this tomorrow. So if you have not yet voted, after the show, head over to the community tab and put your vote in for this for the July ETF. So tomorrow when it's time to start scripting, I can come in here and hopefully we have a clear winner. Hopefully. Not sure what I would do if we had a three-way tie. I'll cross that tomorrow if it happens. Holy cow. But yeah, and of course, this is the big one right here. So July 26th, Friday, we've got our open to close. So we are going to be on the air starting at 9:15 Eastern, and we're going to 4:15 Eastern. Well, 4:15 PM. It's almost like we should use military hours here. But yeah, and that's also live stream number 200. So I do have Ian actually wants to come on the air and say hello during that stream. So I think that's going to happen. So any of you who do want to come on and say, hey, I will give that opportunity on this stream. So if you want to sort of set something up ahead of time, just email admin@mountainfinance.ca, and we'll chat. Otherwise, I might just drop a link on the show too at a couple of points and say, hey, if anybody wants to use it, feel free to come on. So that might be something we do as well. It'll be fun. We have a whole day to fill, so I am looking forward to it. So yeah, that's what we have coming up. All right, now let's bang back here and let's get back to the big screen. All right. Let's see. I'm just saying that's how I search for the ticker. Okay. Air Canada was volatile today. Went down to 16.07 and closed at 16.65. I get in at 16.28. I may add more tomorrow. Not bad. Like, yeah, with Air Canada, I always sort of say if they're under $20, you're in good buying territory with them. Getting under $17 now, that's even better. That is even better. Al says if you're in the USA, your cookies and searches will show you stuff from the USA instead of Canada. That absolutely. That's why sometimes you have to do that TO, either .to or -to, depending on the broker. Sometimes you got to do that. Let's see. Michael says GTN has 19 insiders buying from $8.09 to $9.61. With 2 insiders both bought 10,000 shares each at $8.09, which pays a 0.08 dividend each quarter. Interesting. So GTN, let's take a look at GTN, see if there's anything special over there. All right. It helps if I click on the right thing here. GTN. All right. So that there is a Gray Television. We'll grab this one right here. So Gray Television. I've not heard of Gray Television, but look at this. They've certainly been moving in the right direction. Let's look at them for the last year here. Okay. So they have at one point been up at $10. So interesting. They do have a dividend yield of 5.654. So 8 cents. That's what you were mentioning. The 8 cents there. Interesting. Let's see what is going on with this company. Let's pull in here and take a gander. All right. So right now they're currently not profitable. So they are in the hole. We can see that from a negative return on equity. Their debt to equity ratio. Oh boy, this is concerning. This is probably why they're struggling. 317% debt to equity ratio. So that's a lot of debt, a lot of debt. So this is a company that is probably praying for Papa Powell to cut that rate in September. Yeah, for sure. So yeah, it's interesting. It's interesting. But what does I find interesting too, and let's take a look here. Give me 1 second. I have GTN. Let's give me 1 second here. Let's go to Simply Wall Street. All right, if we go GTN. All right, here we go. GTN. Whoops. I think I grabbed the wrong one. All right. I think I wanted this one here. There we go. All right. This is the one we're looking for. All right. Just going to come down here and take a look. All right. All right. So here's some of the recent insider buying. So as you can sort of see right now, there have been, well, this is a big sell-off here. In 9 to 12 months ago, there was one sell-off of 34.93 shares. But there has been a little bit of buying since then. Let's see here. A little bit of buying in January. There hasn't been a lot of action, at least that they're reporting right now on this site. But yeah, it's kind of an interesting thing. They do have actually here, let's take a gander or something. I want to see. All right. So right now, like their fair value is around $27. So they are definitely undervalued, but it's that debt. That debt's going to hold them down. And I just want to see here. Give me a second here. Well, this is kind of interesting here. So analysts right now. So this is analyst forecast, because there's always a forecast on where they're going. So right now, this is big. Now this here is big. They are predicting in a year. So basically a 1 year time frame, they're predicting that it's going to be around $10.83. So that's a 91.4% jump. So that would be interesting to see. But oh gosh, I'll tell you, the debt does scare me a little bit. I will admit, but analysts do seem to be pretty happy. And let's just take a look here. They are forecasting earnings to grow 2.45% per year. But of course, one of their big things right here, of course, is because anything that has to do with debt, in this case, interest payments, they're not well covered by earnings. So they do have a little bit of a struggle. But obviously, if they play their cards right, analysts do seem to think that there's a chance in here. So that could be a very interesting play, Michael. It could be an interesting play for sure. Y says, my biggest loser today is AT&T. All right. And Michael says, I can't understand why tech was up after the world event at all airports around the world was closed until the next day with all the systems down, then also affect other business. Yeah. So the whole crowd strike and some of the issues that it has caused on the technology side, amazingly, it really hasn't impacted tech the way you would expect. So for example, let's go back to our US heat map here. All right. Now, where is here we are. Here's Microsoft. Now, you would expect for Microsoft to see any of the biggest impact. Now, they went down a little bit, but you really didn't get a huge bounce down from this. And it's kind of weird. But at the same time, I look at the widespread outages that it has caused, but I didn't actually run into a single one personally at all. Nothing. But I know that people doing a lot of flights were kind of the big issue. It seemed that airports got hit more than anything else. And I know they were also worried about some of these different little boxes that run Microsoft software that don't normally get updated very often. So there is things that they're concerned about. But yeah, it's interesting. I find it very interesting that it didn't hurt too much. What actually hurt tech more than anything was when Biden was talking about increasing sanctions on China and all of the chip worry that impacted them more for sure. Oh God, I love that coffee. Okay. Let's see. Insiders. Insiders invested only 80K. They don't sound overly interested in GTN. Yeah, GTN, like I said with GTN, it's a debt. That debt scares me a little bit. Tech was up because it has been hammered last week. Exactly. Exactly. So with Biden exiting, Trump became even more favored to win. The market wants the markets want Trump to win. That's why the market in tech was up. So yeah, the market did price in a Trump win, and it's kind of interesting. We're now in this situation where because Trump has announced that he is not going to run, it kind of resets things a little bit, so there's going to be a whole bunch of more evaluation, and we have to sort of see, like, and I've said this in regards to Kamala, is that she's been so low key as a vice president that I really don't know where I stand on her. I did listen to her talk a tiny bit today, but I mean, she was much more legible, and uh, I did like that, but we'll have to see. We'll have to see what happens. Um, I think it's going to be, and I've been adamant for a long time on this, that no matter what happens in this election, it is going to be an interesting one. It's going to be one for the history books, one way or another. So yeah, I'm looking forward. I'm looking forward to seeing how it all boils down. And it sounds like because all of the main contenders for the role, for the president or the president, for the nomination, they've all basically bent the knee to Kamala and have endorsed her. So it really doesn't look like they're going to have any kind of a convention or, in that sense. It sounds to me like she's going to be she's just going to get the role, and they're going to go ahead with her as it is. And I can understand why. I can understand why for many different reasons. But I think she's going to. I think it's going to be a fun. I can't wait to see how the debate will go between her and Donald. Time to make your own coin. I know. I should do that. I should do that someday. See, plus the shutting down of systems, it was one company or sort of two companies. It was not the fault of the entire sector. Yeah, it wasn't. That's the whole thing. If anything, one of the walkaways I think that a lot of people got is they're like saying there should be a bit more diversity out there. So, I agree. I mean, I live in an Apple ecosystem, so Microsoft, and that's probably another reason why Microsoft problems don't concern me as much because but I mean, obviously, if there was an Apple situation, that would concern me. Let's see, GTN. If you check all SEC filings, that are 19 insiders that bought shares. Maybe. It's just that it hasn't been updated yet on the Simply Wall Street. If there were more insiders, so that's just the thing. Let's see. GTN headquarters is in Atlanta, Georgia, which owns 114 TV stations, which make money from ads, which make profit of 79 cents and raise full year outlook and paid off over 53 million of debt and refinance rest. Okay, well, let's take a look at that. All right, since you brought that up, let's go back here and we'll go over to their financial health. And so, yeah, there's a few things here I like. Like, look right here. If we look at this is their short term. So right now they do have bigger short term assets than liabilities. So 601 million to 424. Long term, 10.13 billion to 7.61 billion. So that's not too shabby. But this is what I'm looking at right here. So right now, their debt to equity ratio is 227.9%. If we go back, you can see that it has for the most part been going up. So, but their debt at one point was up at 6.755 billion, and they have gotten it down to 6.154 billion. So there has been a little bit of movement in the right direction there. We are seeing the debt coming down a little bit, and that's good. That's definitely good. Definitely would want to see more of that. And I'll tell you, If they keep paying that debt down, and if they do, they are expected to have higher income or higher revenue next year. There's definitely room that this could be a good stock. It's like I said, I'm just cautious with the debt a little bit, but we'd have to look at the debt even more. For one, what type of debt? What are they actually using that debt for? So, you do have things, for example, if you're spending debt to expand, that can be considered good debt. Whereas if you're taking on debt, for example, to pay off dividends, that's not really good debt. So there are different types of debt, and you'd have to take it all into consideration. So if you're really wanting to deep dive on this, you would definitely dig into a lot more than just looking at a couple simple things. All right. Let's see. How debt are you seeing because they paid off over 53 million and refinanced the rest? Well, right. But even if you refinance your debt, it's still debt. It's just that it's been refinanced, renegotiated, all of that fun stuff. But yeah, I mean, we're looking right here we're looking at their statistics. So yeah, they have paid some of their debt off for sure. Like I said, 6.755 to 6.154. And you're saying 53 million. Yeah, that's about 53 million they have paid off. You can see that right there. You can see that coming from here because yeah, like 75. So 6 billion 75 million down to 6 billion 15 million. So yeah, actually it's a little bit more than I'd say it's a little bit more than 53 million. It looks a tiny bit more, but yeah, they have paid off some debt. At that point, they had a debt to equity ratio of 280.6 down to 227. So they're moving it in the right direction. I like that. But, and keep in mind, I'm not saying this is a bad stock. I am not saying that at all. I'm saying I'm a little worried I'm a little, cautious about the debt. I do like some of the things that we can see. For one, I like where the analysts are projecting the price is going. So, you have that potential that you could see this share price go up 90%. That's not too shabby. That's not too shabby at all. So I definitely think this is an interesting stock. I'm not saying don't buy it. I'm not saying that at all. What I'm saying is that if if your due diligence says, okay, this is one I want to take a chance on, that's great. Just pay attention to it. Just make sure that they keep on the track that they're on now. If they stay on that track, you're probably going to be very happy with that purchase. But definitely pay attention. All right. Video says they own TV stations. I would be a little bit afraid. Had a bad experience with Chorus. Yeah, Chorus though I think is a bit of a different company for sure. Videos, but good luck. And this makes sense. Yeah, CrowdStrike, because I mean technically it wasn't Microsoft. It was CrowdStrike that actually caused that error. So yeah, that makes sense. Al says refinancing means you are still in debt. Yeah, exactly. But they did pay their debt down quite a bit. I'm giving you that. Patricia's in the house with a high. Still reeling from the aftermath of the CrowdStrike event. Let's see. Michael says, do you remember what I told you about PED, which I said zero debt, which is oil and natural gas, that had an upgrade of 175 last Thursday, which was new wells in partnership with EPN? Do I remember? I don't. I mean, I do and I don't. I do. I've seen it. I know I've seen the ticker before. So, let's see. Video says, I hope she will have a better speechwriters. I think so. Well, I think the thing is, I think with Joe is he's kind of at the point that, he is kind of limited to what's on his teleprompter. I have a feeling Kamala will be able to sort of ad lib quite a bit. I think she'll be fine with that. And, I think she'll have better overall conversational ability. Let's see. Kamala seems to have less of a chance than Biden to beat Trump. I can't stand Trump's personality, but on the bright side, Trump will help our portfolios. Yeah, absolutely. I mean, the market does tend to do well under Trump, but you also have to look at it this way. There's basically two types of Americans, I think, out there. There's Americans that love Trump, and there's Americans who just want to basically vote for anyone but Trump. So, Kamala might get some of these. I don't even want to know if you call it a protest vote. She may get some votes for that simple reason. I know I was watching some interviews earlier today, and they were interviewing a Republican who says he's like, I voted Republican. I voted for Republicans every election, but I can't vote for Trump. So she's getting my vote because of that. And there are people out there like that. I think it'll be an interesting election. I have no clue who's going to win at this point. I really think we need to sort of move a bit past Biden, and get a chance, like really get a chance for the two of them to interact and see what kind of a campaign this is going to turn into. Why Video says Trump already helps our portfolios. Enid says, hello, everyone. I'm late again. Yes, a little bit. You're coming in towards the end, but hey, there's nothing wrong with coming in at the end. It's been another fantastic day. So, all right, guys, we are coming into the end. So if you got your last minute questions, drop them in, and we will go from there. I'm going to have some coffee while you guys do that. That was good. That was definitely good. Whew. So yeah, like I said before, we'll be back here on Wednesday. Of course, we have another market close, and then Friday is the big show. We will be here from open to close. It's going to be fantastic. It will be absolutely cool. I can't wait. Rather excited about it. And of course, after that, then we have to start thinking about what the heck am I going to do for you guys for the 5,000. We've been building up to something. I don't have a clue what, but we're definitely going to see how this is all going to turn out. All right. Michael says, Trump would do a better job than Harris, which couldn't control the border. And if Harris did win, would be the worst 4 years of your life, and she won't spend a penny on armed forces where Trump will. Okay, well, once again, we have to sort of see what's going on, because you have to look at it this way too. As the vice president, she's kind of had to fall into basically into Biden's plan. That's kind of part of the role. So we have to see how she's going to sort of step out of the Biden shadow and what she's going to bring to the table. So I don't like to make any kind of judgments until I have enough data. And with Kamala, like I've said before, I don't really know her. She has been very quiet as a vice president. So looking forward to see what she brings to the table and see how it goes. But right now, based on everything I know at this exact moment, it does look like it's Trump's election for sure. But let's see what she brings to the table, and let's see if that changes anything. Why is the tech sector always overreacting? I would go as far as to say the entire market sometimes has a habit of overreacting. And part of it is because, well, when you look at the market, it all boils down to psychology, and people tend to overreact. It's one of the reasons why a lot of people are really bad at trading, because they get in there and they just give into their own emotions. It's that, whether it be FOMO at one end or FUD at the other, it's never a good thing. Jonathan said there will be no parachute jump for the 4K. No, we're not doing a no parachute jump. Yeah, there'll be no Yeah, I'm not going to jump without a parachute or with a parachute. I'm not jumping. There's no jumping. But we'll figure something out. Let's see. She was supposed to be the border czar. Well, we'll have to see. Or czar. Sorry, I'm French. That's fine. There's nothing wrong with that. All right. This has been another great close. We'll be back here. Like I said, we'll be back here on Wednesday. We'll do it all over again. We'll see, and we'll have a rate cut perhaps to talk about, or perhaps not. We'll have to see what the Bank of Canada. They have the last word on that. So until then, I will. First of all, hey, Let's get rid of that. There we go. Until then, I will see you guys really soon. Enjoy the rest of your day, and check out the CDR video either today if you're a channel member, or of course tomorrow if you're not. I think it's going to be a good one for sure. Take care, everyone. Bye bye.